Hello, everyone, and welcome to another episode of NFA Live. It is Thursday, so it is time for Rob, Ben, and myself to talk crypto. Rob and Ben, it's great to see you guys. Rob, how are you doing?
Pretty good. Just waiting for Uptober.
Oh, yes. And how about you, Ben?
Same old, same old. Sorry, I was muted for a second. I'm trying to tweet out the live stream, and I'm
trying to
multitasking as ever.
Yeah.
That's brilliant. Very good, very good. Folks, if you don't already follow Rob and Ben, then you can find links to do so in the description, and I highly recommend that you do so. Both guys put out excellent content all the time. So I heartily recommend it all. And if you have any questions for Rob, Ben, and dare say even myself, then feel free to put them in the comments. And once we've gone through today's talking points, we may try and answer a few of them if we have some time. And please don't forget to hit the like button as well and do all the other things that YouTubers are always telling you to do, because they're good. They help more people see the stream. And that's what we want, obviously. Okay, so now I'm casting my mind back to last week's live stream. As I remember, the market was a bit down last Thursday. And then, because we were all waiting for His Excellency Jerome Powell to speak at the Jackson Hole conference last Friday, which he did, and it had quite an effect on the market. The God candle for Ethereum is a joy to behold. So I would like to get some thoughts. I'd like to get some thoughts. Ben, I know this is an area that you're big on, and I'd like to get some thoughts from you on it, ideally. What did you make of Jerome's speech? And I mean, did you feel that he was kind of maybe feeling the heat from Trump, who's been sort of needling away at him for the past few weeks? Or did you get the sense that maybe he felt we've been too high for too long? What did you make of what he had to say?
I mean, he certainly was more dovish. A lot of it, I mean, look, anyone's going to feel political pressure in that office, right? Especially if you have someone tweeting about you, the president of the United States tweeting about you every other day, right? It's hard not to feel the pressure. But I think you could argue that a rate cut is justified with the job revisions that we had last month. And look, I mean, inflation from the tariffs, could it still be a thing? Absolutely. We saw it in the PPI numbers, so we saw it in upstream inflation. We haven't really seen it in CPI, downstream inflation. But I also get they don't want to just sit around and wait until it's too late either. So, I think it makes sense for them to cut 25 basis points, and I'm guessing it was the jobs report that really encouraged Powell to cut. They also cut last September too. I mean, if you think about it, it's almost a carbon copy of last year. Last year, the first cut was actually in September. I think the bigger thing to think about isn't just the cuts, but it's it's where the cuts are relative to the neutral rate, right? And if you use the 2-year yield as an approximation of the neutral rate, last I checked, it was around 3.6, 3.7%, whereas the Fed funds rate is, 75 to 100 basis points higher than that, right? It's at 4.5%. So a 25 basis point rate cut will be nice, right? It will be nice. And I was sort of joking on Twitter that, Powell was quoted saying that they're cutting rates to send Ethereum to all-time highs. But I do think we will see a rate cut in September. I'm gonna guess we'll probably get one more, another rate cut. I don't know if it'll actually happen in October or not. I could see them waiting a little bit longer. But yeah, initial claims came in this morning and they're still relatively fine. And I think there's some, banter that, why cut rates if the labor market is doing okay. But on the flip side, you don't want them to wait until it's obvious either. So yeah, I think a 25 basis point rate cut makes sense right now. But also, I think it's fair to say that everyone who's criticized Powell about all these prior meetings where they should have cut rates, you still have gold at all-time highs, right? You still have the S&P 500 at all-time highs. Ethereum is basically at all-time highs. Bitcoin's not that far away from all-time highs. I think the problem is if you use the stock market as a gauge for the economy, though technically they're not the same thing, but if you use it, you could argue that the correct decisions have been made previously, because here we are, and it's August 2025, and everything's basically at all-time highs. So I don't really think you can criticize them too much. But again, it's easy for armchair economists to criticize Powell no matter what happens. So I think he's probably going to do what makes sense, cut 25 basis points at the next meeting, and then we'll see.
Yeah, I mean, I guess that is one of the things that comes with the job of being Fed chair, is that one half of commenters will, or at least will, always think that you're wrong. But of course, I guess Powell and the rest of the FOMC probably have access to the sort of data that much more detailed data than the rest of us, or certainly they're probably seeing that data a lot sooner than most other of us are. So I guess you've got to give them that. And as you say, Ben, it's kind of easy to make the case both ways, isn't it? Like there is definitely a strong case to be made for cutting rates now. But as you said, Powell can point to a number of things like gold, like the stock market, and say, well, actually, if it ain't broke, why fix it?
Yeah, exactly. Because he doesn't want inflation to reaccelerate. I mean, he was already a little bit too late in raising rates back in 2022. They probably should have started raising rates in 2021. I don't think he wants inflation to come back right as he's about to leave office in 2026, assuming they don't try to fire him before that.
I suppose as well, he's got maybe he's thinking ahead to his leaving office, but perhaps assuming that whoever follows him into that chair is going to be a sort of lackey of Trump's, who will probably be expected to do Trump's bidding, and maybe he just has to prepare the ground as best he can, do what he can in the time he has left, because soon it'll be out of his hands one way or the other.
Right. It's all about how will he be remembered.
Yeah. Rob, is there anything you want to add on Powell and what he said at Jackson Hole, or should we move on to the next talking point?
Let's move on. I think we're going to get some information in September 17th, and we'll go from there. It makes sense what Ben said and what the pundits are saying, but we'll see in September if he cuts or not. Yeah.
I guess as well, the market, I mean, has the market already priced this in, do you think?
I mean, people will say that it definitely priced in, but when it comes there and he actually does cut rates, and the market flies, then people say, well, I guess not. And it seems like these things happen again and again. So I can't say one way or the other which way. We'll just see what he says. I know, like, if you take a look at the CME, I think we're at 85% where they expect this rate cut to actually happen. And it's not like it's perfect, and we'll see. But again, that data that's been coming out, if those jobs numbers didn't nuke and we lost 250,000 jobs, we wouldn't be talking about this. And I think GDP, the revision came in a little bit higher as well. I think it came to 3.3. So if you take a look at that, you're like, what's it going to do? Well, I mean, the economy is not doing that awful. I know people are screaming at me right now saying the price of blah, blah, blah is up, but we'll see.
Yeah. Well, yes, I think definitely that's what many market participants are calling for, a rate cut, and it does seem likely that we'll get one. Maybe we should be consulting Polymarket as well. We should be adding that to our data. I think last I heard, I think people, the good folks on Polymarket were pretty confident of a rate cut in September as well, and they've been riding that wave ever since they called the election right last year. So. Gospel truth, I'm sure. But anyhow, I want to move on a little bit and talk about the fact that summer is generally been pretty slow, and I think it was arguably the case this time. People go away on holiday, it all calms down a bit, certainly in traditional markets. But it has to be said, summer is now winding down, folks. We're almost in September. Certainly people are starting to come back to work. Kids are starting to go back to school. So should we be looking ahead to what could be Uptober? I'm skipping out a month here. Is Uptober the next big thing on the horizon, or is it perhaps a little too soon to be getting excited about that? Rob, what do you think?
Well, I'll say, like, I mean, we just look at historically what's been happening. And if you just throw this up, I mean, if we take a look at September, it's been a pretty good, I don't know if you've ever seen this website, but in September, I mean, the last 2 years have been pretty good. But then even in like our blow off tops in 2021, in 2017, and also in 2013, not great months. But we'll see. And I think, again, I know people will say, well, it's priced in, the rate cuts. But I mean, if Jerome comes out and he says, okay, 20, or let's just be ultra bullish. If Jerome comes out and says 50 basis points cuts, I mean, that would really send September flying. And I don't think that's even remotely priced in. But again, it really does come down to, it's a liquidity thing. And if we still think that the M2 money supply is going up, which it is, I think we got here at 22.1 trillion. This goes to July. If you take a look at the Fed in St. Louis, this goes all the way up to August, 22.1. And the global liquidity itself is going in the same direction it always goes, which is up. I think we'll be just fine. So September, I can't say if it's going to be great or not. I can just tell you that moving into Q4, I still say we've got a really long way to go. And I think there's going to be some really good things to happen. It's just, I don't know if it's going to be September or, like, historically speaking, we're talking like October, November, like we've seen in other cycles before. So I'm ready to do whatever the market hands to us. I'm ready for it. If it goes down, great, I get to buy. And if it goes up, well, great, because I've been buying in the bear market. And that's pretty much all you can do.
Yeah. Absolutely. Hope for the best, expect the worst. Ben, what about you? How are you? What are you planning for? What's your outlook for the next couple of months? Do you feel that maybe Uptober is going to live up to its name? What are the tea leaves telling you?
Yeah, I mean, a lot of times in post-halving years, you see the market, sort of pull back into September, which is kind of what's happening. And then try to gear up for another move in Q4. So that's probably, that seems like a reasonable assumption to have, just sort of a pullback into that September timeframe. And sometime in September, Bitcoin will more than likely find a low. And then I would hope that it can bounce then in October. That's kind of been my base case here. I do think the high for August for Bitcoin will likely hold as the high until, probably through September. I have a feeling it'll take a little bit longer. That's what I think. I think I generally agree with Rob on that. Just pull back into September, find a low, and then start to move back up. That doesn't mean you have to wait until October for the market to start going up. Just like you didn't have to wait for September for the market to start going down, right? But the sort of a local top was found about mid-August. You'll probably find a local bottom sometime in September, which means, because I know you're thinking it means Bitcoin dominance will likely start.
Yeah.
That's what we want to hear. Because, Bitcoin dominance is declining pretty quickly. Or has been. So, that's, which obviously is, everyone is now looking at that as the precursor to Altseason. And as you've pointed out, Ben, we've seen this, capital rotation to ETH now. Do you expect that to continue a little longer?
I think the rotation back to Bitcoin starts next week. In September. That's basically what always happens in post-halving years. Altcoins outperform Bitcoin in from mid to late June until late August, and then Bitcoin then gets a correction that bottoms out in September, and it's sometime during that correction that altcoins struggle against Bitcoin. And then usually what happens after that is that Bitcoin then rallies into October, and it takes a while for the altcoins to catch up. Because if you look back at all the prior breakouts, Bitcoin dominance starts to go back up until Bitcoin puts in a new all-time high. So yeah, I mean, I think the rotation to Bitcoin will start in September, and it will probably continue through October. And then I could see a scenario where you get a rotation back to altcoins in November.
Okay. Something to watch out for then. So October could certainly be up for Bitcoin. Alts is perhaps another matter, which is obviously what people a lot of people are hoping for. But let's see. It's I think there's definite reasons for optimism. Whatever.
I would say like altcoins could go up in October. They'll just probably not go up as much as Bitcoin.
Yeah. Well, I think a lot of people would be fine with that, so long as alts do go up. Okay, now I want to change gear a little bit and talk about something that we did a video on this recently, and it's something I'm finding really interesting because it does raise, I think, some fundamental questions about where crypto may be headed. So I think one of the features of this year is that we've seen a lot more TradFi players, if you like, getting involved in crypto, or at the very least, exploring crypto further. A lot of TradFi companies, I think, have been crypto curious, either overtly or quietly, for a long time now. And the kind of changes that we've seen, especially in the United States, things like the Genius Act passing. We've also got the Clarity Act going. I think it's before the Senate next. Or maybe it's the House. But anyhow, there's been a lot of regulatory progress made in the US, obviously under a very, very pro-crypto administration. So it does seem to be that crypto is sort of opening up to TradFi, and TradFi is kind of preparing to take advantage of that. And one of the features that we're seeing with that, really interestingly, I think, is we've got certain companies and some really big companies not only looking to build their own layer twos. I mean, for instance, we had Kraken, which is obviously a crypto native company, but they built their own Ethereum layer 2, which I think is called Inc. But we've also got Robinhood recently announced that it's building its own Ethereum layer 2, the Robinhood chain. Meanwhile, we've also got the likes of Circle and Tether, the two big stablecoin issuers. They are actually building their own layer 1 chains. Circle is building something called Arc. Tether is building two, Plasma, and I think the other one's called Stable, if I remember rightly. Meanwhile, Stripe, the payments giant, is working on its own layer 1, and even Google Cloud is building its own layer 1 as well. So that's the sort of background to it. But basically, these are going to be. I think most of these layer 1 chains, if not all of them, are going to be EVM compatible. So they're based already on Ethereum's technology, but they're going to be standalone layer 1s, which would suggest that they probably, won't have, there won't be much value fed back to Ethereum itself. Mm-hmm. So my question for you guys is the idea that so much of finance is going to be settled on public and permissionless blockchains, your Ethereums, your Solanas, your Suis, your Avalanches, whatever. Is that idea, is that starting to look a bit like wishful thinking now? If we've got these big crypto curious firms actually going it alone, so to speak? Rob, can I start with you on this one?
Yeah, this is a very nuanced question. And I'll tell you, like when I first got into crypto in 2017, at first it was Bitcoin, and then I kind of realmed down to like Ethereum and then XRP. And I would hear about these banks that want to do their own layers. And I thought, well, XRP then is worthless because these banks are going to take it over because that's just pretty much how it goes. But then there's been some nuance to it. And have you guys ever had any partners in business? I'm sure you have, in whatever business venture that you do. There's an old saying, and it goes, if you want to go fast, go by yourself. But if you want to go far, bring people along. And I think that's pretty much what we see right here. And if you can just throw this up, Guy, because this is the nuanced part to it. Because when some people hear this, they're like, okay, then the banks and all the TradFi is just going to wipe us out. But then the other people will say, no, it won't matter because Decentralization is great, and it's going to, take over everything. And there's something in the middle. This was from Circle, where they introduced ARC. And if you just dismiss it and go, oh, decentralization is better, and it's because there's no single points of failure, and it's because all the people are available to it, and it's just a better version. Sometimes it's not. And this one, ARC, they made some good points. They said time and again, we hear the same concerns from our partners. We need predictable fees that we can plan around. I got to tell you, some of these big, large institutions, they don't want to pay these massive Ethereum fees. Remember the last bull run that we had? And we had $5, $10, $15 Ethereum layer 1 fees. Now, of course, people say, well, layer 2s are going to take over. But even then, sometimes we have these huge fees. I'm not going to deal with that. Our treasury team can't hold volatile crypto assets to pay for gas fees. We can't move sensitive payments. Who do we call if we need help with something? Of course, there's nobody really. That's actually very funny. And there's nobody to call. So before people say, Rob he's now for the banks. That's not what I'm saying. I'm saying this ARC and these other layer 1s, they're actually going to complement Ethereum, Solana, Avalanche, Sui, all the different things. They're going to, because there's different strokes for different folks of what they're actually going to use. And then when I think about this, I think about, because I'm old, and I remember these days before Netflix, there was this thing called Blockbuster. And Blockbuster was awesome because you can go there and you can get a VHS tape or a DVD. And then along the way, Netflix came and said, hey, we'd like you to go into a new era by just do streaming. And they said, get out of here. We don't need you. This is stupid. This is the same thing that the banks did with layer 1s and things like that. And then when Blockbuster finally figured it out, like streaming is the big future, they did this thing called on demand. But they were just $1 late and just too short. And they didn't really take off. So with this one, I think the banks will still have it. And if you take a look at what like USDC or Circle is actually doing, it's the same thing with with Apple and their code, which is, it's not open source. There's a kernel, there's a part to it that's open source for Apple, but the most of it is closed and it's only for them. So people say, oh, Apple's they dominate everything. Well, they do, but they also have these other things around called apps. You go to the App Store. So it's the same thing here with if Circle builds a layer 1, you're still going to need layer 2s. And if you're like a layer 1 like Ethereum, you're going to have somebody like Base who's going to come along and say, we'll be a layer 2, so you can do it both ways. And for this one, I just see it as reminder that as far as payments go, did you know there's $1.8 quadrillion in global payments right now? And you think that one person's going to actually be able to land everything? It doesn't work like that. There's going to be so many people that are going to actually need this in one sector, in the institutional side. There's going to be other sectors like the small businesses, the people, the individuals, the tokenization for the single individual. And there's so much to go around. We just don't even see it because we're at a paltry $3.9 trillion market cap for everything. So when people say it's going to be the worst thing of all time, it's not. It's just there's pros to it. And the reason why I have this up is because I was actually going to do a video about this, and I'll do it later. But the pros are, you can use a stable coin for USDC if they do it, and it's going to be on just USDC, not Ethereum. They've got fast validators, 10,000 TPS. There's a built-in FX engine. They have opt-in privacy, seamless integration, and it's even compatible. But the problem with them is, again, different source, different folks. ARC is a permission set. So there's a single point of failure. And another big thing is there's a risk of fragmented liquidity. Imagine this, like what you just said, Guy. If you have Circle and you have Stripe and you have JP Morgan and you have all these ones doing a layer 1, then you have all this fragmented liquidity. You need as much possible liquidity to actually go farther. So again, if you want to go fast, go by yourself like these guys are doing. But if you want to go far, you have to bring everybody into the fold. And I think that's where it's really going to come to. And then it contradicts DeFi stuff and all this stuff. But again, like I was just saying, is if you have some institutions, they're going to do this for the banking and the integration sector. But for the other part, if you want real decentralization and real people around, then you're going to do something like this. And I think that when people hear these things, they get a little nervous. They're like, shoot, this is where it's going to be. But again, there's so much money sloshing around and there's so many use cases that if you just sit back and think to yourself, okay, which one of these chains can actually make it? What is an actual utility going to be? Where does the actual product market fit? And you'll see that there's some really good options out there. And for me, I just take a look at stable coins as well. And I take a look at Ethereum, I take a look at Solana, I take a look at BSC, and I take a look at Tron, which are the big 4 ones. And then lastly, I will say, and I'll put it over to Ben, there's a difference between Robinhood making their own layer 2 and Robinhood partnering up with Arbitrum to use Orbit, which is their institutional grade side, where you build it on top of Arbitrum, but it's your chain. But you're still using Arbitrum, which is layer 2, which is a layer 1 on Ethereum. There's a big, big difference between that and say what Circle is doing with Arc. I know it was a lot. Sorry.
No, that was great. That was great. Ben, can I pass it over to you? I mean, how do you see this? Is this a threat? Is this just going to be? Is this just responding to what the market wants?
I mean, honestly, I don't really know how I can add a whole lot to what Rob said. I think that, for me, I valued, more decentralized chains like Bitcoin and Ethereum. But I learned last cycle that that's not what everyone else necessarily values. And so I've tried to be more open-minded about that. I guess what it means is that, the most decentralized protocols are not necessarily the, most probable end chains for every use case out there. It might be nice for everything to be built on Bitcoin, and for, certain things to be built on Ethereum. But at the end of the day, sometimes when you look at some of these chains, profits, or the margins can be razor thin. It can be hard to profit. You don't have as much control. So I think there's some element of a lot of the industry wants to be more in control of the chain. And also I think that by having it be more centralized, as sad as it is, it's probably easier to bring it into some, type of regulatory compliance that maybe the more decentralized chains can't necessarily promise. So I think Bitcoin will always still be there no matter what. I don't think Ethereum's going anywhere either. I think they're always going to be there, but I don't know. I mean, it's not. I don't think we can assume that every future application has to be built on just those. You'll likely see, more centralized chains also. And it's just a reminder once again that not everyone values the same thing.
Yeah, 100%. And I think that the average consumer, just as we've discussed many times before, they just want something that works. They just want their payment to go through. The average merchant, your coffee shop or whatever, your anyone selling anything, they just want the payment to complete. They don't care really how it's being done in the background. They don't care if it's running on decentralized rails or not, I think in the majority of cases. And it's interesting what you say, Ben, about control, the entities behind it wanting control. And I think it's going back to what Rob was pointed out with, those things that Circle highlighted in that documentation about ARC. They framed it from the kind of consumer's point of view, didn't they? It's like, well, the consumer wants to know the fees. The consumer wants to know who they can call if it goes wrong. But actually, it's the issuer. They want control over it. The issuer wants to know how much they can make in fees, because I guess they're looking at Ethereum or Ethereum layer 2s or any other layer 1 and going, well, we're providing these products, we're providing these stable coins, but the value is in the transfers, is in the transfer fees, the gas fees that are being paid. But these layer 1s are sucking that up. Why shouldn't we extract that value from the product that we issue? So it's actually, it's kind of like, well, it's not just the consumer. It's actually the entities behind it as well. They're like, well, as Ben says, we want to control it. We want to know that, we don't care if there are 3 validators, 6 validators, 9 validators, so long as we're running them all.
Yeah, that's exactly right. It's just like with Base, they didn't really care too much. They're like, well, we've got one validator. It's under Brian Armstrong's bed, and it's just some 2010 PC that's running the whole blockchain. So yeah, I mean, they don't really care. And like you said, it's about fees, and that's a lot. I mean, you take a look at the fees for Tether, what they're generating, and USD. I mean, Tether is huge. Yeah. I think they have 20 employees or something like that, and they're almost, I mean, multi-billion-dollar company, probably be a trillion-dollar company.
I think they're the most profitable company in the world per employee. Profits relative to employees. I think others are more profitable, but they have more employees. You know, I mean, Tether
exactly.
is tiny in terms of actual staff. It does sort of point to a different future, I think, because people, you know, the average person doesn't care all that much about the number of validators. Actually, Rob, I think with Base, though, I think there's 2 validators. Actually, I think Jesse Pollock has one as well.
That's right.
So you know, that's it's twice as decentralized as you were making out.
It's twice as decentralized as any bank out there. So congratulations, Base.
Yeah. I think it's an interesting and possibly quite scary future, because I think the danger is that we end up with a much more functional product, if you like. If you talk about crypto as a whole, you end up with a much more functional product. You end up with people being able to send, for instance, these cross-border stablecoin payments that are settled in milliseconds, and that's great. But actually, behind the scenes, the very ethos of crypto that got the whole ball rolling, that so inspired Satoshi Nakamoto and people who came after him, will have gone, because it'll basically be a more efficient version of the current banking system that we have already, which is where a handful of centralized entities that are controlled by an even smaller subset of people are basically the ones running the show. So we'll have crypto, but it won't, you know, it won't really be as it was intended to be.
Yeah. It would be nice to see more payments on Bitcoin, more Lightning, and then the Bitcoin dominance could go up dramatically. But here we are.
I think it's going to be an interesting one to watch, because I think we may end up with a sort of slightly different future than we imagined, and maybe it'll just work so well that most people won't care. Let's find out. I want to ask. I've seen a lot of comments recently all over the place. I think a lot of people are very fed up with this cycle. I've seen the comment "worst bull market ever." If I've seen it once, I've seen it 1,000 times. And obviously, I think alt's underperformance has got a lot to answer for here. But I want to get your guys' take on this. Is disappointed too strong a word? Are you disappointed with how this bull market has turned out so far? Or has it met your expectations, or do you think the best is yet to come? Ben, can I start with you on this?
I mean, the cycle looks like any other cycle if you just look at Bitcoin's ROI, just with diminishing returns. I mean, it's kind of the same thing that always happens. I don't really know, what to tell you. I think a lot of people are kind of remember the last cycle where a lot of the gains were concentrated in like late 2020 and early 2021. Whereas this cycle, it's been more of a very slow progression by Bitcoin. I mean, the reality is Bitcoin went from 15K to already 124K. And like, that's a huge move, I think the issue is that like a lot of the altcoins haven't really joined in yet. We finally got Ethereum to join in to a new all-time high. Think about how long that took to happen. I think you probably will get a rotation back into alts eventually. But again, this is just a classic reminder that Bitcoin leads the bull market. And if you do get an alt season later this year, which hopefully that's what happens, that's the sign it's over, right? I mean, like the major alt season that everyone keeps wanting, historically, when that happens, the top for Bitcoin's in. So this is one of those things where it's like, be careful what you wish for, because like once it happens, you have a few weeks and then the party's over for a while. So yeah, I mean, I think for me, it's been a pretty standard cycle. If you actually look at, maybe I could show my screen very briefly, but let me see if I can share my screen so people actually know what I'm talking about. Here, like if you look at the ROI of Bitcoin from the low, like, I mean, this is what it always does, just with diminishing returns. If you look at it as measured from the peak, again, like it's not that different from the last couple of cycles. And if you measure it from the halving, I mean, it does have diminishing returns, but so did the last cycle, and so did the cycle before that. So, I guess to me, this is one of those things where like every cycle, the people that look at the diminishing return stuff try to tell people, hey, we're going to have diminishing returns. And everyone like screams, no, it's going to $1 million. Right. And then a few years later, it becomes obvious that we did have diminishing returns, and you think people learn their lesson. And then the next cycle, people forget about it again, and they start calling for, $1 million again. Right. So yeah, like it's not a failure on Bitcoin's part. It's just, the higher the market cap, it just takes exponentially more money to move the market for Bitcoin, right? And this is a natural progression of things. And I think some people say, well, this time is different because now you have institutions buying. But I think last cycle I said this, right? Like in order to get the prices to where they are, like this was a natural progression of things, right? For bigger and bigger entities to come in and buy. So yeah, I think it's been a pretty standard one. I think people are upset because a lot of them faded, Bitcoin dominance, right? A lot of them sort of faded it and thought it was a joke. And then you look back a year later and you're like, maybe it wasn't such a thing. Maybe we shouldn't have been joking about that the entire time. It was a real thing. And Bitcoin did outperform most of the rest of the market for most of the cycle, which is what always happens. I mean,
I wonder as well whether people's expectations sort of I wonder whether people sort of forget just the sort of finer details of previous bull markets and previous alt seasons. And is there the temptation to look back to 2021 and just go and just remember it wrong and be like, that whole year, everything was just up in a straight line, where everyone was just making money. You'd just log onto your portfolio every day and you'd be thousands of dollars richer, or tens of that, whatever it was. And actually, when as you're so good at doing, Ben, when you show people the actual data or how it actually played out, you realize that this whole thing was condensed into a really short period of time, which and as you say, it looks like that is going to happen again. We're just going to have to be very, very quick. But people's memories fail them a little bit, and they imagine like past cycles have just been like year-long parties.
Right. You get like 2 months of like a period where alts are really outperforming Bitcoin, and then a lot of new retail investors join, and then that's what happens the entire cycle. And that could happen again this cycle, right? Like maybe a little bit later this year, we get a period where altcoins are starting to outperform Bitcoin. We're already getting a taste of it, right? You're already seeing Ethereum doing it. So maybe that's a sign of what might happen in a few months. And if that happens, I imagine all the new retail investors that come in will assume that's what always happens, and then spend the next 3 to 4 years wishing they had looked back at what actually happened and not just what they remember, because they were very emotionally invested in that. So yeah, just remember, Bitcoin leads the bull market, and whenever it stops leading is usually when the cycle's over.
Yeah. And Rob, I mean, do you feel the same, Rob? And can I add another question on? Do you think people are going to learn from this one? And if we do get the alt season that we're hoping for, even if it's in that very short period of time, do you think people will then rotate back to Bitcoin, or will they make all the same mistakes again and just ride it all the way up and ride their alts all the way up and then all the way down again?
Well, two things. Like the original question was, do I feel content with what's happening this cycle, about how I've done things? See, I've had an unfair advantage this whole cycle. And the unfair advantage is I get to show up and listen to you and listen to Ben to talk about Bitcoin dominance and what happened for the last cycle and how he got wrecked with the alts, investing into them, just going to Bitcoin. And I get to listen to you and talk less and less about altcoins and more about Bitcoin. And it just kind of beat into my head, like maybe I should diversify, but be more towards Bitcoin. And it worked out pretty well. But then to answer your question about, do I think that people are going to, they're going to learn from, what's happening? I think some have already, but there's going to be a lot of people that looked back in 2021 and said, okay, I got into Cardano. I'm talking myself. I'm not talking about your alt. So here's my alt. I talk about Cardano, and it was at, a dime or 3 cents or whatever it was. And then in 2021, it just went up, and then it was great, and it went down. course, you make a bunch of profits as long as you don't round trip. And people say, well, it worked before, so it's going to have to work again. And the ones that aren't here and listening to the message every week, like, hey, this thing it's happening again, but there's a little bit of variance. I think that those people won't get it until it's like, hey, it's 2026 April or March, and what the hell happened? Why didn't this one do 100x like 2021 or 2021 did? And I think that's what'll be. The only ones that actually make it are the ones that do more research, listen to some things, take a look at the different data points, and then go, oh, okay, well, maybe I should be a little bit this way as far as like with diversification. So yeah, I think a lot of people aren't going to learn, and the ones that do will be the ones that come out favorably. But that's like how it is in every market. You just got a bunch of people that kill it, and I mean, at the top, and then a very few that just kind of like get suckered in. And unfortunately, if you're listening to this video, it's not going to be you.
Yeah. I mean, I guess that's how bull markets work in a way. Alt seasons work, isn't it? In that the people who get out early, the ones who play it right, who don't allow sort of greed and animal spirits to get the better of them. Because we all know that it's impossible to sell the top, but you have your targets and you get out and you're fine with that. It's that sense. It's like, oh, but it might go a bit higher. But of course, there will always be people who are left because someone has got to hold the bag, haven't they?
Yeah, someone has. And I'll just say lastly is like, I mean, I have pretty heavy Bitcoin, but I still buy alts, and I'm currently buying alts. I know when people say, well, why are you buying alts now? Because we're just going to keep going down. I'm not buying alts when they're like close to their all-time highs. I'm buying as they're starting to crater, because I think that some of these, like the Solanas, like Ethereum is like a blue chip, like a little bit of Cardano as well, and SWI are going to outperform later on. And I'm just essentially throwing sand in the ocean, thinking that I don't have to have them all take off, just one big one. And that's it.
Yeah. I think that's a very good point, because I think it's something I see a lot. People kind of feel the need to sort of try and chase everything and have, these huge portfolios where they've got multiple positions in so many coins, and it's so easy to lose track. And it's like, it's not a guaranteed way to success. A lot of people will tell you need to have a cap on it at some point. Some people just cap it at Bitcoin. But yeah, it's the temptation to just sort of spray and pray, I think is pretty destructive a lot of the time.
True.
Yeah. Okay, those are the talking points I wanted to raise with you guys. I'm just going to see if we've got some questions from our wonderful audience. This one from Shane. My question is for Ben. When 3-hour BTC dominance video? It's been a minute, Ben.
Maybe in probably not 3 hours. It's a little too much.
2.5.
I'll have Rob do that one. Yeah. I don't know. Probably do a Bitcoin dominance video in like 3 days, because if I do it now, I'm gonna still deal with altcoins outperforming Bitcoin for a few more days. But I'll probably wait 3 more days and then do it.
Okay. You heard it here first, folks. Set those reminders. GK Goat is asking, could the market throw a curveball and actually have a positive September against the herd because of rate cuts? I mean, I guess this is a question like, are rate cuts already priced in? Are they going to be? Is the market going to lag them? Any thoughts on this one, guys?
I mean, anything's possible.
Yeah, I think we talked about this. I mean, it could happen. It just depends on which way Jerome goes.
Yeah.
Yeah, you could have a low in September, but the market could still go up. Just like in August, we had a high in August, but the market has gone down.
Yeah. Very true. What do you think of this one? It's not so much a question, but I think it's an interesting talking point. I think big money is using ETFs, but I still think we'll see a lot of retail through Robinhood and Coinbase. I mean, I think the interesting part of this perhaps is the fact that last cycle, we were not talking about Robinhood. Suddenly, and I guess this ties into what I was talking about with, these TradFi players. Obviously, Robinhood, as mentioned, is building its own layer too. But that I think is an interesting dynamic. You've got the ETFs, which changed the market, over 18 months ago. But now I think it's fascinating that you've got suddenly talking about companies like Robinhood in the same breath as Coinbase.
Yeah, I don't. But for this one, big money is using ETFs. So you're just talking about there's this. Well, there's 3 ETFs. There's Bitcoin, Ethereum. There's that very small Solana. But as far as like with they're using Robinhood to. They're talking about paying for crypto, and that's it.
I mean, I think they're suggesting that the big capital, maybe the institutional capital, or big private capital is coming through ETFs, which would explain why Bitcoin and latterly Ethereum have done so well. But sure. The retail money is going to come through Robinhood and Coinbase. And I guess it's just whether that money shows up, whether those buyers show up or not.
I see. Yeah, I mean the volume. I mean, you can't discount Binance as well, but sure. I mean, if retail's going to come back, but if you just take a look at just Google Trends and searches, you see how it's still pretty in the toilet.
Yeah, which actually reminds me of this one, this comment that I saw. Still, so few of my friends get crypto. They are more curious, but still not there yet. Is that something you guys are finding? Do your friends, do the people in your life ask you about crypto very much, or is it still sort of that weird thing that you do for a living, but no one really gets?
They ask about Bitcoin. That's pretty much about it.
Yeah. What about you, Ben?
I try to talk about other things.
Which is smarter.
Yeah. I actually have people asking me about crypto all the time, and I just go, "Oh, can we talk about something else?" done that all day long. Okay, I think that is about it for the questions. We got this one as well. Do you think that by the end of October we will see more ETFs on other currencies?
They're supposed to be coming out, I want to say like October. We'll see what the SEC wants to do. They're going to approve those or not. I have no idea. I think there's one. Isn't there another Solana one up? There might be an XRP one up. I think there was. Wasn't there like a Dogecoin, something like that up? But that's Grayscale. I'm not for sure.
I think there are tons. I think there are tons of applications for. I mean, pretty much anything within the top sort of 20 or 30, I think is under consideration, or has an application in. I think some of these applications. I mean, someone put in one for Pengu, which I think might have been Canary Capital, and I think they're just sort of like TradFi, doing the sort of TradFi version of shit posting. But yeah, I think we will probably see some more, probably for the big ones, Sol, XRP, ADA perhaps. But whether all these other ones get approved or not, that might be a bit of a bridge too far, even for this new SEC, which is so unbelievably pro crypto. It still kind of boggles my mind when you think back to where we were a year ago. That I think is crazy, and I don't know about you guys, but because obviously you're based in the US, do you feel that is that something that's sort of tangible for you? Because I think so many people in crypto seem to have forgotten that.
I mean, for me, it's about. I mean, just take a look at how Ethereum's ETF did in the beginning. It was kind of a laughing stock, didn't really do too much. And now, I mean, then the Solana one that they have, we track it, but it's very little. I mean, it's the same thing with all these other ETFs that are coming. Even if they come in, you still have to convince these institutional players, retail and advisors, that this is the next big thing. And I think when they take a look at it, like what's going on? Why would this have real utility? Why would we actually get into this? I know some people are screaming because of this project or that project, but I'm telling you, for right now, I mean, the things that I see, like, I mean, if you want to talk about meme coins, there's a lot of chains for those, but who the hell cares?
Yeah. And new meme coin launch pads coming out all the time, which is just like, oh, we need more of those, do we? Fantastic. Okay, I'm going to let you guys go in one sec. I just want to flag this comment because I think it's a really interesting question. Could quantum computers eventually crack the security codes of the blockchain? Short answer, AI secrets, is yes. But that is a problem for next cycle. I think we've got enough on our plate at the moment. Do you guys agree?
Yeah, I would only say I think you got bigger problems than just crypto. Think of all your bank accounts and all your personal information.
Yeah,
that's gone.
Yeah.
Yeah.
Again, these questions came up in 2017 all the time as well. As crazy as that sounds, I mean, that was 8 years ago. People were asking the same questions. Yeah, it's going to be a problem eventually, but I mean, who knows when that's going to be? I mean, what if it's not? What if it's not for 30 years? Like, I don't know.
I know. Yeah, it's it definitely is a thing, and as Ben said, it has been a thing for a long time. But yeah, we'll worry about. Well, hopefully, other people are worrying about it for us. The people whose job it is to prevent this sort of thing. But yeah, as you say, Rob, if quantum computing does suddenly become a thing, nothing's safe. So crypto won't be so important then. Okay, that's we're getting towards the top of the hour, so I'm going to let you guys go. But Ben, Rob, it's great to see you again. Thank you for joining us today. Thank you for all your time and insights. Next week, I believe we'll be on Ben's channel.
Yeah.
Correct.
Fantastic. Well, yeah, the summer is winding down. Ben's channel next week. I hope to see you all there. Thank you, everyone, for watching, and we'll see you again very soon.
Thank you, everybody.
See ya.